はい、木曽さんどうも今日はありがとうございます。
今日はありがとうございます。ニューヨークにお越しいただきましてどうも。
ラザードさんの受付です。Good afternoon, and thank you very much for meeting us today in your busy schedule. Can you please tell us about yourself?
Absolutely, and thank you for taking the time. It's great to have the opportunity to chat. My name is Evan Russo. I'm the CEO of Lazard Asset Management. I've been at Lazard for over 15 years and been across multiple parts of our firm. Previously served as CFO of the firm before taking over the asset management business about 2 years ago.
So Lazard has a 175-year history and a tradition, and is particularly well regarded by industry professionals worldwide. Could you please explain to us what makes Lazard Asset Management a unique manager, and what are the company's strengths?
Well, firstly, I would say we're incredibly proud of the 175-year anniversary that we just recently celebrated. I think it gave us a lot of time to reflect on what does it take to be a great organization, become 175 years, to act at the top of the financial marketplace and to have an impact so broadly globally for such a long period of time. It allows you to reflect back and say, what makes a great organization so special, and what do you have to do to continue that for the next 175 years? And so a lot of what we've spent time thinking about is, what are those features? And I think it comes down to three that I call out. One is gathering tremendous amounts of talent, great talent, the superb top of the market type talent in every area of our business. And then secondly, it's figuring out, how do you create collaboration? How do you make sure that all those great talented people are collaborating with each other, are making sure every day they're helping to develop each other, to help push each other to higher levels of expertise, to higher levels of knowledge and information that they can continue to utilize in their everyday business. And then the third piece that's so critical and most important to us, and it's probably the one we spend the most time talking about, is our dedication and focus to thinking about our clients every single day. It's constantly reassessing, what are our clients' needs? What are their wants? What are their desires? How do we best serve them every single day? So that's what we've taken away from 175 years, and that's what we're hoping to continue for the next 175 years ahead. So what makes Lazard unique, Lazard Asset Management, a unique and very, very special organization? I think it comes down to several different factors. One is, we are a global firm, right? We have a global presence with local expertise. And that's the basis of all of Lazard, and the way Lazard was always built was the idea that you should be a global firm, but always think locally. And so that's the first and most important thing that we continue to do every single day within our asset management business. It's why our asset management business spans the world in terms of colleagues and people and experts that we have around the globe at every point in time. The second is thinking about the depth and the breadth that we have within our global research platform. Because great investment starts with great insights, and making sure that we have incredible sector expertise and knowledge and capabilities that's on a global basis, and making sure we truly can go deep in everything that we decide to own, whether it's in equities or fixed income or alternatives, is super important. And so making sure that we're continuing to invest into that global research function on a constant basis and holding it to a very high standard, that is very, very important to us. And then the third thing is making sure that we're continuously thinking about, how do we create oversight and risk management for every one of our portfolios? Because it's always easy to be great at some point in time, but thinking about, how do you continue in that? How do you continue to create great performance stems from and begins from the opportunities around risk management and understanding your portfolios, watching them carefully, constantly pushing to understand them better, understanding where the risks and where the opportunities are within the markets.
In Japan, with the introduction of the new NISA scheme this year, demand for equity investment has increased. However, the passive investments are still quite popular among newer investors. How does Lazard Asset Management, which is particularly strong in active management, view this situation? And what advice can you give to the individual investors in Japan?
Yeah, so firstly, I would say, I think it's great that Japanese investors are thinking about expanding their investment portfolio, moving away from bank accounts, savings accounts, and areas where historically a lot of the money, a lot of their investment dollars were sitting, and now thinking more broadly about risk assets, thinking about investment opportunities that create a broader spectrum of an investment profile for all investors. And that creates two really good opportunities. One is the opportunity to achieve outsized returns on their portfolios and on their money, which will allow that to continue to grow. And then on top of that, the idea of creating diversification of returns. So depending on what may happen in different parts of the world and different asset classes around the world, the opportunities to create value at all points in time is really, really important. So I would start with that. I think that's very, very critical. From the idea of active management, we're huge believers that over long periods of time, if you can get really trusted and capable, excellent investment teams and provide them the right resources and support them in an environment and in a culture that constantly is building upon great ideas, great insights, and helping to generate returns, that's the type of team in that environment that can continue to create outperformance. And that's why we're excited about the active management space. And I think our robotics and automation team is a great example of that. You're taking great experts, you're taking people that have incredible history, experience, and great expertise and great vision about how the world is working, putting them on a platform that they're fully supported with great other experts on a global basis, allows that to all come together, to see the vision of where the world is turning and capitalize on that and create returns based on that on a continuous and consistent basis.
I understand that more than 8 years ago, Nikko Asset Management searched for managers worldwide to launch a fund with at the time unusual focus on robotics and ultimately chose your company. In particular, I believe that the Lazard Asset Management presented a sophisticated investment process for investing in growth area of global equities. What are your thoughts on this point?
Well, firstly, we're incredibly appreciative of the opportunity to partner and to work together with Nikko Asset Management. And the opportunity to have been chosen to lead this portfolio and to manage this portfolio meant a great deal to us. It was an opportunity for us to bring in expertise, to create something that was brand new in the markets, to think differently about the way in which you can create a portfolio and a risk portfolio and creating a solution for clients who wanted to go after and believe in this space here to create outsized returns. So this was a great opportunity. It's been a great partnership, and we're incredibly appreciative of our partners who were able to bring this to their clients. I think the robotics and automation team, as we've all seen, and we've continued to see the great performance that team generates, it comes from a couple of very important factors. One is that we've created a team that has a diversification of history, right? It has a diversified background. It has different experiences. And in our minds, it's critical to have diversity of thought and diversity of experiences when you're trying to identify and to realize different trends that are happening in the world, especially trends that are moving very, very fast, trends that are moving very quickly, trends that are changing constantly, and ones that will have outsized impact for many, many years to come. The robotics and automation team, with their different backgrounds, and the PMs and the portfolio managers on that team, bring together a global understanding of the world in a way that allows them to continuously spot the trends, to see the opportunities, and to capitalize on them for their investor base. And we've seen that in the returns. So putting that all together in an active risk management framework allows them to continuously identify the areas of opportunities, to capitalize on them, and at the same time to make sure that they're seeing the pitfalls and the risks associated with investing in a very, very fast-moving area.
I ask you this question. You are in the heart of the United States, New York City, financial city.
So it seems, yes.
How do you see very long-term outlook for this country? I'm talking about the stock market, the U.S. stock market.
Look, I think the U.S. stock market has always been, and certainly in the last several decades, has been an incredible place to invest. It's a great place for innovation. It's a place where innovative companies come to list, and there are great opportunities that have been developed in this marketplace, in this environment. I think that will continue to grow and continue to expand. But we also believe that you need to be global, and you need to think globally, and you need to act globally, you need to invest globally. You need to think about global opportunities, because great companies exist in all parts of the world. Sometimes they're listed in different locations. They can be listed here in New York. Sometimes you can spot trends in one that are early for the other. And I think that's the beauty of a great firm that has a global presence, is its ability to see trends before they take part in other parts of the world. So we can spot things that are happening in different regions that we say, hey, that is going to attract, that is going to build into different areas around the world, and it will expand and it will grow. And so you can sense the different movements that are happening around the world by having a broader experience, by seeing the breadth of understanding of how industries are developing, not just in a local context, but also putting a global framework around it. And in many ways, the US market is a great melting pot for that, because so many companies and international and global companies continue to come here and be a part of this environment. But it's not the only place in the world that you have to think about. But it's a great place to sort of build opportunities, build stocks, build companies, and therefore the opportunities to take advantage of that from an investment perspective will continue to be a primary area to look for those opportunities.
Can you please explain those three words: excellence, empowerment, and engagement?
Excellence, empowerment, and engagement. I mean, those are three of the sort of pillars of Lazard. They're super important. What it represents is we truly believe that our talent needs to be excellent. Everything we do has to be at the top level. Everything we do today, from a perspective of getting the right people, we hold them to a standard of excellence. When we engage with our clients, we hold ourselves accountable to make sure that we're delivering excellence to those clients every single day. Empowerment's important is because we're a firm that doesn't just always run together as one, right? We like diversity of thought. We like different people thinking in different directions. We want to empower people to challenge ideas, to challenge insights, to challenge opportunities and the risks and rewards of marketplaces. When we sit around and we think about great investing, we need people who feel empowered in order to bring their best selves every single day, their best ideas, and the ability to challenge those unique concepts that might be out there, challenge conventional wisdom, challenge conventional ideas, and have different views, visions of the way the world is going. And engagement. We constantly believe in the collaborative approach. We need to engage internally at the highest levels, because you can gather great people together. But what really makes a great organization is not just having great people. It's how they interact. It's how they inspire each other. It's how they build upon each other's greatness. It's how they drive each other to even higher levels of thought, higher levels of ideas, higher levels of client service. And that comes from putting great people together, forcing that engagement, making sure we're in an environment and a culture that supports that engagement and wants more of that to allow us to continue to drive to higher levels every single day. That's why those are three very important pillars in our world. It's the things we think about every single day when we wake up.
Thank you, sir. Thank you for your time.
My pleasure. Thank you.
So, hi, Red. It's very nice to meet you.
Nice to meet you.
Can you please introduce yourself?
Yes, I am Red Brown. I am the lead healthcare analyst for Lazard Asset Management. I have been here for about 19 years. Prior to that, I was on the sell side for about 8 years. My last firm was Deutsche Bank Alex Brown. And then prior to that, entering the world of finance and investment, I actually worked in the healthcare industry. I originally started my career as a bench scientist doing basic research for a biotech that is long gone.
Could you also tell us about the growth prospect of the surgical robot market?
Yes. So let's start with where we are. So last year, Intuitive Systems did 2.3 million robotic procedures, representing growth of about 22% year over year. That breaks down further. The United States is a larger number, given that that was their initial market and is the most penetrated. That was over 1.5 million procedures, which grew about 20%. And then the balance would be international procedures, which is a faster rate of growth because the penetration is much, much lower. And that grew about 27%. So that 2.3 million procedures should be set against the context of an addressable market that Intuitive has defined as more than 6 million procedures. So we're talking about a 35% penetration rate as of today. However, if you contextualize this relative to the total number of global surgical procedures, you're talking about somewhere around maybe a mid-single digit percentage penetration overall. In the US, that would be probably approaching 8, 9, 10% penetrated. Internationally, even lower, probably around 2 or 3%. And as I mentioned earlier with the Da Vinci 5 and its capabilities, it is very, very likely we will see an expansion of this addressable market as Intuitive defines it. And so that 6 million plus is likely to become much larger over the next 5 to 10 years.
Thank you very much.
Okay.
Hi, Keith. Very nice to meet you.
Nice to meet you as well.
Can you briefly introduce yourself?
Yeah, so I'm Keith Morey. I've worked at Lazard for about 10 years now. I cover the U.S. industrials and materials sector here at the firm.
How do you see the BEV market in the U.S.?
Yeah, the battery electric vehicle market at the moment is about 7 to 8% of total vehicles here in the U.S. It's about 1.1 million units. And in the US, it's a little bit different than globally because we in the US have about 50% of our sales to passenger autos being large pickup trucks. And so that's not something you see globally. So the penetration rate will also be different probably over time. And when we look ahead, we've seen a large amount of growth the past 2 years, and we're starting to see those trends moderate. The growth rates are slowing amongst a higher interest rate environment. And so when I look ahead on the electric vehicle market here in the US, I see a few different things. But over the next 3 years, I'm really excited that the growth will continue, maybe just at a slower pace than previously anticipated. And there's really 4 reasons or 4 major factors to keep watching for the electric vehicle market. One is the Inflation Reduction Act. Post the election, we could have some changes in that, and that will impact consumer demand because there's a $7,500 tax credit there. And also over time in that act, the reduction in materials from China has to reduce over time. And if OEMs are not able to meet that requirement, the 70% of models today that qualify could be reduced, also creating an affordable issue for consumers. The second is financing costs or interest rates. EVs are still a premium purchase for most consumers. And so if we maintain a higher interest rate environment, that'll also continue to be challenging. And I would say the third and fourth points, the third is the companies themselves, General Motors and Ford, are losing billions of dollars at the moment producing these vehicles. And so their capital spending projects at the moment for the next 2 or 3 years to meet EPA requirements is pretty locked in because the cycles in autos are 4 to 8 years in terms of a new model. But beyond that, I think you could see some capital spending rationalization if you can't get these models to be profitable in a reasonable time period. And the last is really range anxiety still exists amongst consumers here in the US. And we're seeing superchargers and we're seeing charging infrastructure built out. And we are seeing slow incremental improvements in battery technology. And if those were to accelerate, maybe that could help range anxiety. But at the moment, it still seems to be quite a topic amongst consumers. I think all in, the prospects are still positive, but probably at a slightly lower pace than we had previously anticipated.
Okay, thank you very much.
Yeah, thank you.
Thank you. Hi, Patrick. How are you?
Good, how are you? Thank you.
Can you please introduce yourself a little bit?
I'm Patrick Horn, a research analyst on the robotics navigation team, covering primarily the cap US industrial tech names and for software names in the automation space. Right now I'm in Chicago at the Automate 2024 conference. Some in-person work city technology.
It seems the exhibition is quite lively. How is the atmosphere at the venue?
Interesting atmosphere. There's definitely a lot of excitement. There seems to be a little bit of disconnect between the demand environment from some of the larger consumers and the excitement from the smaller consumers. That's borne out in some of the conversations we've had with companies here, but it's very crowded. It's a little hard to even get into ask some these guys questions. There are a lot of people here.
Could you touch on the most impressive exhibit that you have seen so far?
Well, I'm sure you could guess a big theme of a lot of the exhibits I've seen here today are AI. When I attended last year in Detroit, the big theme was AMR, mobile robots, or for instance, warehouse automation. That definitely receded a little bit this year, but the AI mainly guidance and a lot of vision guidance has been on pretty prominent display here. A lot of large robotic arms using cameras that I'm not particularly familiar with are the AI guidance systems for pin-picking, palletizing, applications that even a few years ago were notably very difficult to accomplish.
Thank you. Well, thank you very much for the time.
Okay, thank you.
Schedule. Hey, T-Jet. It's very nice to meet you.
Nice to meet you too, Okamoto-san. Good to see you again.
Thank you for your time. Could you please introduce yourself?
Sure. So my name is Chiet Kaiser. I am a portfolio manager on the Global Robotics Fund. I work together with Kishida-san based in Tokyo, Celine Wu based in San Francisco, and Patrick Horn, who works with me here in the New York office. And together we are the caretakers of their capital in that particular fund.
In Japan, passive fund is quite popular, but I do believe that Japanese investors need to have some sort of a thematic investment like mega trend or innovation such as robotics to enhance their portfolio return. As a portfolio manager, could you please explain what active investment in this global robotics fund means in the contrast to index investment?
Sure. It's a very good point you make, and I would really like to touch upon this. I think it's important to point out the difference between active and passive investing. For us, it's important to realize that there are two skills that a PM team needs to bring to the table when it comes to advanced active investing. The first one being the understanding, the top-down research that has to be done of the different components that make up a big megatrend like robotics. And secondly, it's the bottom-up skill of being able to identify the companies that are most likely to be beneficiaries of these components of that megatrend. And that requires a lot of in-depth research done by the team, but also by the global research analysts that we have at the firm. I think it's also important to add to this that there's a long-term and a medium-term component here, how we think about the development of a certain megatrend like robotics. For instance, the long-term aspects here are very much driven by things like demographics. And I think globally it's safe to say that demographic developments are leading to an aging population, which then in turn can lead to labor shortages, which then will lead to wage inflation. It's a very long-term effect that is very predictable, and that wage inflation has the effect that a solution for this problem naturally comes from automation, and therefore from robotic solutions. Those elements of active investment management versus where we are in the passive world. Passive index investments do not have an alpha target. There is no outperformance target. Index investments strictly follow rules that guarantee the market's return. So if you invest in an index or a passive product, there is literally no chance that you will outperform the market. And that is really the difference between the two.
And you do believe this theme has a long way to go?
Yes, I absolutely believe this theme has a long way to go. It has a long runway to begin with. The first automation solutions were from the early 19th century already. When you think about the steam engine, and then electricity, and then later in the 19th century, we had the first actual robots to where we are now, where the internet is playing a big role to connect devices. And in the future, we see a very large component of the current developments in technology adding on to the next generation of automation solutions. So it's safe to say that we have a few generations to go at least.
Could you please tell us a bit more about the investment process of this global robotics fund? And can you focus on the stock selection process? Some part of the process may have changed over the past 8 years since the inception of the fund. But I'd like you to explain core concepts that have not changed and will likely not to change in the future.
Yeah, I understand. That's a good question. We launched the fund in 2015 already, so you're right that there's a long history of more than 8 years in the fund already. So I think it's good to touch upon some of the core concepts in the investment process. Three main components that we always think about when we think about stock selection, about companies that are eligible for inclusion in the portfolio, are the following three. So the first one is that we need to seek companies where we expect growth in terms of the function of technological innovation. So the product or the service that they offer has to go through a cycle of innovation that can be useful for the end markets that they service. Which brings me to the second point, which is the actual end market demand. You can make a product or offer a service, but if there's no demand, then your company will not do well. So there needs to be an end market that has a particular demand for an automation solution. And finally, it needs to make sense, right? For a client to implement a new automation solution, you are replacing a human component in your process. So therefore, you need to be able to see a return on investment. So that return on investment can either come as cost benefit, a result of this new technology, this new automation application improving your process, or it could come in the form of incremental return that comes to the process. I think it's important to point out that in evaluating companies, especially companies that are known for their innovative technologies and their growth profile, it's important to have an appropriate method of valuation that associates both the quality of the company and the output of the company in the form of, in this case, the earnings or the profit margin. And obviously, a higher quality assets and higher operating profit margins, or just profit margins in general, earnings will command a higher valuation premium. And this helps us think about not only just the raw valuation method for each individual company, but it also helps us to think about the timing of buying and selling of positions in portfolio. And when we think about the timing of positions in the portfolio, higher relative valuations are for us signals to think about maybe we can trim positions and take some profit and then reevaluate the profits from those positions into companies that have lower relative valuations. We do this across the board across the different segments and the different trends within the robotics and automation space. And we do this consistently.
So based on that unchanged core concept, I'd like to hear also about the investment themes that you're currently focusing on and the outlook of robotics development. I think the Japanese investors want to know if it's time to invest in this fund. And additionally, please touch upon your approach to valuation when investing in growth stocks.
Okay. These are excellent questions, and I'll unpack them in order. So I think to start with, I think it would be difficult to say that it is not generative AI or artificial intelligence that is not at the forefront currently. And AI definitely plays a very important role in the network and the landscape of robotics and automation on various different layers. Really, the first version of ChatGPT that became popular was launched in end of 22. So it wasn't until last year, 2023, that it became something that was very visible to the general audience and a very popular topic in investing. Currently, we're in 2024, so we're still in very, very early innings of this space. And the advancements are very rapid, absolutely. So it's very early days for this space. Especially higher up the stack. It's very difficult to see generative AI move a physical object. You cannot have a virtual solution move a box for you or put a car together. That doesn't mean that there are no solutions or incremental technology improvements and innovation that we can see in the physical space. There, we're really looking at companies that are innovating the embedding of AI in physical and hardware solutions. And there, I think the keywords really are the edge computing abilities on physical robots on the factory working floor. Generative AI and AI applications can help improve in real time the process of physically automating certain industrial and factory automation processes. That is still very early days though, but we can see that as an extension of where we are currently in the technology cycle for AI. The second part of your question was related to valuation. So, and specifically to how we look at valuation methodologies in growth technologies. So I think it's important to mention that a core concept here is that valuation for any company, really, the value of a company, it should be aligned with the quality of the company and its ability to deliver profits or improve profits over time. So we really look at valuation models against the sum total of the balance sheet quality of the company, especially debt versus asset ratio, and whether or not the assets that a company has in terms of not just the PP&E, the property, plant and equipment, but also the R&D pipeline and the intellectual property that a company can bring to the table, how that can help develop the products going forward and therefore grow the profitability profile over time. In terms of what that means for valuation, having a role in the investment process for buying and selling stocks in the portfolio, we like to think of valuation in relative terms here. Relative terms meaning, is a stock, has it become expensive compared to its own past, given that roadmap or that profile towards profitability going forward? If so, then it might be time to take some profit. Conversely, if a stock is relatively cheap against its own past or against a peer group of companies that are in the same business, then it might be time to add. So there, the valuation methodology helps us to time the positioning of the sizing of the positions, if you will, in the portfolio. And that's really how we think about being flexible in terms of valuation in the portfolio. I think at this point also, if you look at where we are in the fund currently,
your global robotics team's investment management is characterized by its sophisticated investment process, focusing on long-term investment growth. This approach may seem evident, but it seems challenging to execute consistently over time. I'd like to know more about the specific structure and the processes in place for making investment decisions, as well as the collaboration between you and Kishida-san, who is based in Tokyo.
I'll happily touch upon a few of the elements that make this possible, and thank you for the compliments. I think it's important to realize that as a firm, so Lazard Asset Management, where we work, we have approximately, or maybe even more than 300 investment professionals who work at the firm globally in the capacity of a research analyst or portfolio manager. So for instance, the analysts that you met today, some of the analysts in the healthcare field, technology field, in capital goods, they are very much veteran, very seasoned, very experienced analysts in their respective sectors. They've been, in many cases, been working for the firm for a very long time. These research analysts, some of these analysts, they work together with a broad range of different portfolio management teams, including like ourselves. We consider ourselves quite lucky, actually, to be able to work with with these people who are really at the top of their field and have been contributing to the product, to the investment process since inception. And that has been of great help and of great support for us to be able to achieve the results that we have over time. So that is the basis of operations, of us being able as a team to work within the firm. Secondly, as a team, as a global robotics team, there's 4 of us who are dedicated to just this specific strategy. There is, like I mentioned before, we have Celine Wu, and you spoke to her today, who is based in San Francisco with a background in emerging markets, very strong understanding of the technology space, close proximity to Silicon Valley, and a background in automotive investing as well. She is Korean born, and that adds to the diversity of the strategy. We have Patrick Korn, who is in fact on the team the only person who was born in the US. He's based in New York with me, and he's a dedicated research analyst who focuses specifically on US companies in the design and process automation space. And I was fortunate enough to be able to launch the robotics fund together with Kishida-san, who is obviously Japan-born, has experience working in Japan, but also in US markets before he returned to Japan some years back. He's been with the firm also 13 years, and we've been working together for almost a decade now, I guess, together building up this entire strategy. In terms of how our team functions, really how decisions are made, we have at least one weekly meeting with all 4 of us to talk about everything that goes on in the space, from the developments in the various end markets to talking about companies that we've met, to talking about specific technology developments that may or may not become relevant for both the companies and for automation solutions over time. Aside from that, we have the ability, and we do so on a very frequent basis, to visit companies to actually see what they do. So what is the robotic solution or automation solution that we're talking about? In some cases, we actually get to fidget around with a robot or try it out and see how it works. And that gives us a very good understanding of the actual nature of the companies and the products that we are talking about. We have, thanks to the reputation and the brand of the firm, almost uncomparable access to management teams. So we quite often, if not almost on a daily basis, sit at the table with the senior management team, the C-suite management CEOs, the CFOs of companies, that we can actually talk about their company, the future of their product, and to see where they are taking the next generation of automation and robotic solutions. So that is a massive advantage that we have over the earlier question that you asked about passive investing. I think finally one thing to add is we've been very fortunate, Kishida-san and myself, to be able to travel the world together and to also attend certain trade shows and really see how the robotic space, how automation space develops over time. And we've always had very good discussions and the ability to really think about the future and where the space is heading. Working together for 10 years almost now, I really feel that this has become a bond between the 2 of us, to really understanding the space and bringing our own views into the portfolio and helping our clients achieve their investment goals. So that's been a true fortunate situation for us. Just one more thing that I might want to add. One of the benefits also of having a team that is based across the world, because Kishida-san is based in Tokyo and I myself am based in New York, we get to see the total 24 hours of the market because of the time zone difference, which also gives us a unique perspective on being truly global investors.
The consistently high allocation to Japanese stocks is also a unique feature that sets you apart from many other global equity funds. How do you think about positioning and the strength of Japanese companies in robotics field?
That's a very good observation you make, so thank you for pointing that out. I think it's safe to say that Japanese companies have actually always been at the forefront of automation and of robotics solutions. The country as a whole has developed a very good, very strong footprint in a number of different end markets in this respect. Established themselves in the automotive space, manufacturing, and in electronics, and all these industries require a lot of automation. And one of the key features here that I think we should point out and that really makes Japan special from the perspective of their industrial footprint is the concept of precision. And Japanese companies are very good, certain Japanese companies, at building the components and the equipment that is so relevant and so important for robotics as a concept, but also for as a product, but also for total automation solutions, especially for factory automation and industrial automation. Because if there's one thing you need on the factory floor, it's both speed and precision. And Japanese companies happen to be very, very good at this space. So as providers of elements that are essential to the value chain, these companies will likely always be represented in the portfolio. But aside from that, and we've talked about this earlier today, the onset of the next stage of information technology, generative AI, is really changing the landscape for semiconductors. And semiconductors as the essential components for data centers, which themselves form the backbone, the infrastructure for developing the new models, the generative AI models, the large language models. They require a lot of semiconductor content and next generation content. And so it turns out there are actually quite a few companies in Japan that have a unique position within the semiconductor value chain in terms of the machinery they make. They make the machinery that makes that semiconductor content. So really higher up the value chain, we see a specific number of Japanese companies that have excellent competitive position in building and supplying the tools that will make this semiconductor content development and next generation technologies possible. So combining the two of them, if you really look forward into the next generation of automation solutions, you have that precision and you have the need for staying competitive, bolting on that generative AI, the AI control element to automation solutions, which are then manufactured by Japanese companies. I think it's fairly safe to say that not only the history of a relatively high allocation of Japanese equity in the portfolio, I think for the future it's safe to foresee that we see quite a bit of value in Japanese equity and that the allocation can stay at a position that is significant, especially compared to our peers.
Thank you very much for answering all the questions I have.
Thank you for giving us the opportunity to discuss the history and the future of the robotics fund. ありがとうございました、岡本さん。Thank you.